A very good morning to all of you. I am C. Rachna Sharma on behalf of the Committee on Public and Government Financial Management of the Institute of Chartered Accountant of India. I welcome all the viewers to the second webinar on Government Accounting Overview of International Horizon under series of webinar on the theme Good Governance System in Government. Today's session will be delivered by Shri Harish Srivastava, Joint CGA, Department of Expenditure, Ministry of Finance, who is an eminent expert in today's topic. Before going further, I would like to give you all a brief overview of the committee's activities. As a partner in nation building, the ICI through CPGFM is contributing to improve the accounting, financial reporting, and financial management system in all tiers of government in India, including local bodies, also known as local government. The committee is involved in sensitizing officials of various tiers of government in India by various means, such as organizing workshops, developing relevant e-training modules, etc., submitting technical inputs on various documents of Government Accounting Standard Advisory Board in India and internationally on the documents of International Public Sector Accounting Standards Board, running certificate course on public finance and government accounting that can be attended by government officials as well, formulating accounting standards for local bodies and also providing technical support for certificate courses for accountants of panchayats and municipal bodies. That is the joint initiative of C&AG and ICI. Now, I would like to invite CA Ankit Verma, the moderator of today's session, who is a co-opted member of CPGFM, and his professional journey has been marked by significant contributions to the field of accountancy. He has involved with the Deborah branch of the Eastern India Regional Council of ICI, and his leadership roles within the branch include serving as a secretary, vice chairman, and chairman during the period 2016 to 2018. He is also a founding member of the Northeast GST Professionals Association, demonstrating his commitment to advancing the practice and knowledge of GST in the region. Over to you, sir.
Thank you. Viewers, on behalf of the I welcome you all to this second webinar on government accounting, overview of international horizon, that is being organized by the Committee on Public and Government Financial Management as a part of series of webinar on the theme Good Governance in Government. I am pleased to welcome to our distinguished speaker, CA Shri Harish Srivastava ji, Joint CGA, Department of Expenditure, Ministry of Finance, who is having expertise in public finance and government accounting arena. Before proceeding further, I would like to introduce our speaker. Mr. Srivastava is a distinguished member of the Indian Civil Accounts Service, having joined in the 1997 batch. Over the years, he has held several significant positions, showcasing his expertise and leadership in various financial domains. From 2003 to 2007, he served as the financial advisor and chief account officer of the Indian Government Mint in Noida. During his tenure, he provided invaluable advice on financial matters and played a pivotal role in the corporatization of mints and presses. Mr. Srivastava then took the role of Deputy Controller General of Accounts from 2009 to 13. In this capacity, he offered technical advice on budgeting, accounting, and banking arrangements. Notably, he has assisted in the Sundarmurthy Committee in revising the existing chart of accounts and was instrumental in implementing an electronic payment system, the CEPG, which enhanced efficiency in public expenditure across all central civil ministries and departments. From 2013 to 18, he served as the Director of Budget at the Department of Economic Affairs, Ministry of Finance. His responsibilities included the preparation of the union budget, cash management, and debt management. Currently, he holds the position of Joint Controller General of Accounts at CGA headquarters. Here, he has been a key figure in rolling out several digitization initiatives, including the e-bill project, the TSA framework, and the automation of tax accounting and reporting processes. He has also worked on internal audit processes and e-asset management. Internationally, Mr. Srivastava has contributed his expertise as a public financial management expert for the International Monetary Fund, He has developed the chart of account for Seychelles Island and Swaziland and has been actively involved in training as a visiting faculty member at prestigious institutions such as NIFM, INGAF, NIPFP, SATEC, and ICAI. I welcome Mr. Srivastav. And about the theme of today's seminar, I would to abreast our viewers that countries around the world have varying accounting practices and standards for government entities. There is a need of harmonization and standardization of these practices to enhance the comparability and transparency across borders. In response, many countries are undertaking public financial management reforms aimed at bolstering financial discipline, efficiency, and transparency. These reforms often entail the adoption of accrual accounting, enhancement to budgeting processes, fortification of internal controls, and implementation of performance measurement systems. However, implementing international accounting standards and reforms in government accounting encounters formidable challenges, including capacity constraints, resistance to change, intricate political landscapes, and disparities in legal and institutional frameworks. Successfully overcoming these hurdles demands robust political will, institutional capacity building, and active engagement with the stakeholders. In today's webinar, we will delve into the intricacies of government accounting and the demand for an increasingly interconnected world. I once again thank you all for joining in today's webinar. I am confident that today's webinar will be a valuable learning experience for all the participants. I now hand over the proceedings to our speaker, H.K. Srivastavji, for his deliberation. Thank you. You are muted.
Good morning to all of you. I must appreciate it's a very, very relevant and very important topic as of now, the overview of government accounting, and from international perspective, an overview for the purpose of comparability, standardization, which Mr. Ankit highlighted. Now, coming to the government accounting system, as of now, it is basically a cash-based accounting system where we capture the financial transactions as and when they occur. Only when the cash is involved, when cash moves out or we receive cash, then we capture the transactions. Now, generally, it has been voiced that this type of cash-based accounting system, though it is fulfilling the requirements of the government per se, because, government is a welfare entity, does not need to prepare balance sheet and profit and loss account, income and expenditure statement. The only thing which government requires is the presentation of its receipt and expenditure and also the gap between the two. Now, but for the purpose of capturing the assets and liabilities of the government, which is very important, that this system falls short of the requirement. Now, this is precisely the reason that now voices were being raised to shift to the accrual-based accounting system for more realistic capturing of financial position in the government. Now, whether whole hog shifting to the accrual accounting system is relevant or required or feasible or practical, there are debates on it. But one thing has emerged, that internationally, there are many countries, majority of the countries who practice cash-based accounting system, but they have adopted some standard accounting practices or some accounting standards to capture the information. And I will highlight two such standards. One is Government Financial Reporting Management System, GFSM. Government Financial Statistics Manual, GFSM, 2014. Now it has been updated. And COFOG, Classification of Functions of Government. Now, as we all know, accounting codes are basic to capturing of transactions in the accounting, whether it is commercial, mercantile based or cash based on government. Now, if we have a standard system of capturing the transactions, then it will add a lot of value to preparation of financial statements. So the Government Financial Statistics Manual and Classification of Function of Government, there are two international standards on accounting classifications which are being practiced by most of the countries. And what did this do entail? GFSM entails that there are a specific accounting codes for cash inflow, cash outgo, financial assets, physical assets, even the granular parts of financial assets and physical assets, whether it is cash in hand or cash equivalent or debt liabilities, out of debt liabilities, whether it is international or domestic, all kinds of accounting classification codes are available in GFSM. Similarly, for classification of functions of the government, COFOG, it captures the sectors of the government in a standard way. So there are like the name of ministries, department, offices may vary from nation to nation, but the sectors, agriculture sector, defense sector, industrial sector, economic sector, social sector, all these sectoral classifications are standardized. If we capture this and we adopt this accounting code, then we will also infuse a lot of standardization and comparability in our financial statements. So I'll highlight these two. Now, thirdly, in the opening, Ms. Rachna also highlighted the role of ICAI and the government accountants together in notifying and developing the accounting standards. And the reference is IPSAS, International Public Sector Accounting Standards. IPSAS provides the framework for standard accounting standards on government attributes like accounting standards on guarantee, accounting standards on loans and advances, accounting standards on equity capturing, accounting standards on grants in aid capturing. Now, if we till now, 3 accounting standards have been notified. One is guarantee, another is loans and advances, third in grants in aid. If we extend the notification of standards to various other attributes of the government, like government publishes and lays 16 statements in parliament, 16 financial statements on receipt, expenditure, investments, public debt, national small saving, guarantee, grants in aid, and so on and so forth. If we have standards on each of them, then it will further introduce the elements of standardization and comparability in the financial reporting by the government. So I will urge that these 3 things, GFSM manual, Government Financial Statistical Manual of IMF, classification of function of government of national statistics of IMF, and this IPSAS framework for standardization and financial reporting, if we adopt, then it will lead to enough disclosures, sufficient disclosures, which will be at par with the mercantile.
Sir, you are muted again. Sir, can you hear me? Shriyasta sir, you are muted.
I will call to sir.
So that was all from us, from my side in the beginning. I'll throw the webinar open for the participants, and then I can respond to the queries, questions, observations, etc. So over to you.
Thank you, sir. Rachna ji,
Yes, sir.
can you please see if there is any questions from the participants, or sir can proceed with the other deliberations?
Sir, proceed. Still no question there in the chat box.
Sir, so there are no questions right now. You can carry on with the topic.
But the objective of the webinar is to just take part in the deliberations. So, but anyway, let me introduce GFSM, Government Financial Statistical Manual. So, we also classify our receipt, like ours is a 15-digit accounting classification system. We capture the functions of the government, programs of the government, schemes of the government, and objective of the government. But we do not capture the administrative unit of the government, the cost centers of the government. We do not capture the debt as such as a financial asset. We don't distinguish between financial assets. No, we do distinguish between financial assets and physical assets, but we do not carry it forward. We do not apply any depreciation policy on the physical assets acquired by a capital expenditure. So in this year finance accounts, if a capital expenditure of 1 lakh crore has happened, in next year's finance account, you don't find it any mention with a depreciated value or appreciated value therein. So that's why this leads to incomplete presentation of your assets. Now, in GFSM, you have the capitalized concept of capitalized physical assets. So in next year accounts, you capitalize it, whether you have depreciation or no policy or not, but you carry it forward. In there are international practices that you capture the tracking and monitoring. You capture assets, you track assets, you monitor assets. That means whenever you create an assets, you track it across the financial years. That kind of systems which we have to involve. Financial assets, we have statements on investment, a statement on loans and advances. There are ledgers to capture repayments, whether these are in arrears, either have received, write-offs, etc., etc. But we are lacking in presenting the actual physical assets per se, for which the GFSM standards and the concepts like depreciation and all would be really helpful. That was on GFSM. On classification of functions of the government, COFOG standard is very simple to operate. You identify sectors as per the standards, and then you develop accounting codes for those sectors and capture those, include this in your accounting ledger, and start using the sectoral capturing of transactions under which sector this transaction is happening. So these two will add a lot of value to the accounting framework. That is all from my side.
Thank you, sir. And since we are discussing the theme about international horizon about that, so what are the best practices of some of the other countries that we are trying to imitate, or the things we are lacking in? We have got idea about what other countries are doing about it and how we can then develop the same with our framework. If you can throw some light on that.
Yeah, so many countries, they have been progressing to adopt GFSM system. Many countries, even the African countries. I also happen to assist to African countries. They have adopted, shifted to. In fact, Nepal also has shifted to COFOG. It has been establishing the GFSM principles in the accounting. So many principles has adopted GFSM and COFOG. Many countries. Now, the challenge is that it leads to some sort of dislocation in your presentation on annual basis. For 1 year, 2 years, you will have to develop a concordance mapping to actually continue the budgetary and accounting presentation. And that challenge is really hard. But smaller countries, they being the low in size and scale, they have succeeded in this. For India, it would be a challenge, but it is a challenge worth taking on. Like most developed countries have already shifted to, they have been practicing GFSM, COFOG, and IPSAS as well. All US, New Zealand like had been adopting cash and accrual both parallelly. So like England also, they have, it has been, UK, it has been practicing cash and accrual parallelly. So many countries have adopted GFSM, COFOG, being in the cash based. Many countries have, in addition to the cash, they have been practicing accrual-based accounting system. So obviously, they have been capturing all realistically all these financial assets and liabilities, etc. And smaller countries like Nepal and African countries, they have started shifting to GFSM and COFOG framework.
Thank you for deliberating on particular that question. Also, when we talk about the challenges that are being faced by our country regarding to government accounting, can you throw some light on what are the particular issues that needs redressal from the government side or from the stakeholders, which will then ultimately give a nice, a good reporting of the government accounting?
Actually, in my introduction, Ms. Ratnam you mentioned that I have assisted to Sundaramurthy committee. So first thing, it's a multi-dimensional accounting classification system which we need to adopt. When I say multi-dimensional accounting classification, I mean to say that when we capture the account in accounting ledger, we capture various attributes of transaction. Which administrative unit is spending that, which recipient unit is receiving that. You know, India is a vast country where huge amounts of money, around 5 to 6 lakh crore, is going as grants in it to various recipient and implementing agencies which are executing our central sector and centrally sponsored schemes. Now, which recipient is capturing? Now, we have also a few policy thrust areas like development of scheduled castes, scheduled tribes, Northeast region development, backward region development. All these attributes are important for our budgetary and accounting classification system. These are not originally envisaged in our existing classification system. So this multi-dimensional classification system provides for dimensions to capture all attributes of financial transactions. And it is one of the things which are of immediate requirement for Government of India to adopt. That is one. Secondly, in our finance accounts and appropriation accounts, the statement to present the compliance to parliamentary authorization. So that is given and that's a statutory requirement. But for finance account, there are 16 statements. If you go through the finance accounts, it is not a very user-friendly statement. The statements are not structured in a way that you can make out some conclusive financial interpretation. So this needs to be simplified, made more user-friendly. Statements should be added which could benefit the academician, politicians, general public, and also other entities like ICAI and other academic units to take advantage, to get more deep insight into government finances by just looking at the financial statements laid by the government in the parliament. So these are a few things on which government has to work on. It has been working on all these things. Let's see what time frame it would succeed.
And sir, and if we discuss about the part of capacity building of the officials and capacity building of the people who are engaged in the government accounting at the grassroots level, what type of challenges we are facing as compared to our international other countries, if we can discuss about that.
Capacity building is a challenge in most of the countries except a few developed ones. Except a few developed ones like UK, US, and a few countries, New Zealand, Australia. Capacity building at the lower cutting edge level, at the operational level, is a huge challenge because accounting is a specialized subject. And in most of the countries, the peoples are not very much experts. Not experts per se. They are generalists who have been trained to be accountant. So in that, capacity building is a challenge. Nowadays, recently, government has launched a big program of Mission Karmayogi at the behest of Capacity Building Commission. And government has they have been trying to completely change the ecosystem of training where there are prescription of developing online learning materials under IGOT, Integrated Government Online Training. So IGOT materials which are being developed. Now, more than 1,000 such courses have been developed by different ministries and departments, different organizations. These are available online. And through this, the government is trying to address the challenge of capacity building, where at any level, people can just, without physically joining an institute, can take self-learning through these courses. So it's a challenge, but government has been trying to address it through this Mission Karmayogi under IGOT.
And so we have got some questions from participants also now that one of the questions is, what is the purpose of monitoring the investment on fixed assets when central government is allocating funds for implementations of a particular scheme? So you are muted.
Yeah, tell me the question, repeat question.
The question is, what is the purpose of monitoring the investment on fixed assets when central government is allocating funds for the implementation of particular schemes?
See, whenever a scheme is implemented, in many schemes, assets are created. Now, government implements schemes through agencies, whether these are state government as agencies, or these are panchayats as agencies, or there are special purpose vehicle as agencies, or there is some separate legal bodies like autonomous bodies and other. Now, each implementing agency, whether it is state or panchayat or urban local body, gets grants in aid from government to execute that, and then the assets are created. For example, Panchayat Bhavan is created. A smart city may fixed assets are created, and these fixed assets are in the ownership of those particular agencies, and those, because the ownership is the primary basic precondition for deciding the whether where the asset would be recorded. It will be recorded in the ledger of the owners. Now, these agencies, through the grants in aid of Government of India, create asset. The owner of these assets are these agencies, and then these assets are being monitored by them. These are in the ownership of these implementing agencies. So there is a need for monitoring the assets created through the scheme implementation, but by the owners of those assets. Any other question?
There is another one, sir. If any payment is made for fixed assets, whose balance sheet should reflect it?
Can you just give me 2 minutes of time to reach my room, and then I'll log in again?
Definitely, sir. Definitely.
Just
Thank
2 minutes. Okay, so can you hear me?
Yes, sir.
Yes, sir.
You are visible.
Actually, the Zoom meeting web link is disabled on the government computers, desktops. So I have no option other than to join through mobile only.
No issues, sir. You can continue.
So any questions, any observations so far?
Sir, one question that was put to you before we disconnected in between was, if any payment is made for fixed assets, then whose balance sheet it should reflect?
Yeah. So see, if any payment is made to the provider of that asset, then the assets will be recorded in the balance sheet of that. For example, if I am giving grant in it to a state, and then a state has purchased some health equipment for its district hospitals, but since it's a scheme of Government of India, so I am assisting states to execute that health services. So the health equipment will be recorded in the balance sheet or in the accounting statement of the state government. In fact, what happens in reality is that states also gives grants to various agencies, like they also give grant to various hospitals or some institutes like Institute of Medical Research, etc. And then these institutions, which are in the nature of autonomous bodies, societies, these spend money of the grant in aid to execute Government of India various activities like setting up agricultural labs or health labs or vaccine labs, and the assets are recorded in their balance sheet. For us, for the central government, it's just a revenue expenditure. Whether it is being used for purchasing or using for a fixed asset, it is still a revenue expenditure for the central government, for the state government.
So in continuation to that, when we are speaking about that, it will be recorded in the balance sheet of that particular entity, and it will be just a revenue expenditure for the government. Then in that case, is there any mechanism whereby when we are preparing the in normal accounting also what we see is that there are some items which are on the balance sheet and on the revenue side, but however we are also giving some reports other than that in the notes, and we make some disclosures about that. So is there any other mechanism in our government accounting whereby the impact of that particular thing or that asset can be merged with the government accounting part of the government part?
Yeah, very good question. In fact, not in so much granular details, but in government, what is happening that internationally, the revenue capital mix is a very important parameter of assessing the effectiveness of public expenditure. How much of total expenditure are you using for creating assets, and how much of total expenditure you are using for normal contingent day-to-day recurrent expenditure? Now, internationally, it should be at least minimum, it should be 70-30. I mean, the 70 is revenue, so at least 30 should be the capital ratio. Or in more advanced country, it should be 60-40, but 60-40 is impossible because the recurrent expenditure in the government is huge. But in India, if you see the revenue capital mix, it is below 30%. Out of this revenue expenditure, large chunk is going as grants in aid to various implementing agencies, which are actually using it for creation of physical assets. Now, so in some way, though we are not owners of the asset, but the fact remains is that that expenditure of mine is creating assets somewhere in the country, within the country. So to address this, so generally it is felt that our revenue expenditure are overstated and capital expenditure is understated due to this anomaly. I don't see anomaly. It is a result of a byproduct of the general arrangement of federal system of the country, and also the arrangement of government implementing agencies, etc. To address this, a concept of grants in aid for creation of capital asset came into being on the recommendations of 13th Finance Commission. 13th Finance Commission realized the inadequacy of the current arrangement to actually present the asset position of the government. So the concept of GIA capital asset came into being. What it is, generally, whenever we give grant in aid to any implementing agency, we opened 3 separate accounting heads. One, grants in aid for salary, because when I am giving grant in aid to ICAR, I am identifying that this much will be used for salary assistance to the ICAR employees. Second, grants in aid for general. That means grants in aid for carrying out all other activities other than capital. And third is grants in aid for capital. So I am taking all the GIA capital part together and I am presenting in my financial statement that this much is the GIA capex. So total revenue plus GIA capex, we are using to project our capital expenditure to the in a more realistic manner, but not per se the details of the asset here. The details of the assets will continue to lie in the books of accounts of the implementing agency or the agency which are owning the assets.
Okay. But still, since the government is already knowing that what is the capex from the grant in aid, that is also a big beneficial, as ultimately the purpose is fulfilled, that we come to know what is the particular amount that has been done in the capex of that.
Yes.
Sir, I also would like to request you, when we talk about public financial management reforms, can you share some successful examples of public financial management reforms from various countries, and what of that particular reforms has been implemented in our country?
You will be happy, and all the whole gathering will be very happy to know that the India has been one of the biggest success story lately. In past 3-4 years, India has taken a big strides in the development of public financial management systems effectiveness. And I will substantiate this with 1 or 2 examples. First of all, cash management, all of us, cash management is one of the important aspects of public financial management. Now, cash management is nothing but managing your available cash in such a manner that you don't fall short of cash when you required, and also you don't pile up huge cash in your bank account which do not give any material return to you. As you all know, Government of India's cash is maintained in Reserve Bank of India bank account, and there is no return as such like saving bank account gives. There is very minimal returns. And the fact is that most of the large part of India's cash balance is from borrowing also, because there is a fiscal deficit. So revenue is much less than what is expenditure. So there is a borrowing. So that borrowed amount at the rate of 6%, 7%, if it is lying idle in your bank account, which gives you a rate of 2%, 2.5%, 3%, it is not a prudent financial management practice. Now, to deal with this problem of cash balance, that is one. Second part, if you are giving grants in aid to implementing agencies, they are separate legal entities. They have their own bank accounts. They keep this money for longer period of times in your bank account. It is your borrowed money lying somewhere without any use, because the grants in aid cannot be used in 1 day, 2 days. It requires a few months to be used. But the system in the government has been that we give in bulk on the basis of quarterly installments or half-yearly installments, etc. Now, to cater to address these problems of cash management, Government of India has taken a few reform measures of public financial management. And one of the biggest reforms is Treasury single account system, where you must have heard the system of public financial management system, PFMS. So first of all, Government of India developed this IT system, public financial management system, to consolidate or to operationalize all PFM activities on one IT system, whether it is making the payments, whether it is accounting and reporting of receipt collections, whether it is doing the accounting, preparation of financial statements, etc. This IT system has been used for cash management. And how? So we have Government of India stopped the practice of giving bulk cash in advance. They made all these implementing agencies to open accounts in our bank account of RBI. And then they were asked to generate payment files in the PFMS just in time when they require. Suppose ICAR is requiring an amount of 10,000 rupees today to pay to some vendor. So it will generate a payment file of 10,000 rupees in PFMS. It will go to RBI. Before that, the ministry will send RBI some authorization of the quarterly or half yearly that, okay, within 200 crore or within 500 crore, whatever claims comes from ICAR, you please honor. So there are elaborate, it is easier said than done, but we have made elaborate IT arrangement to take care of this system. And then the agencies are being made to pay just in time. So the whole problem of giving bulk transfer has been done away with. Now, under central sector scheme or assistance to autonomous bodies, this has been done away with. Under centrally sponsored schemes also, now there is a pilot projects going on where the money will be paid in just in time. So just in time payment is one of the biggest cash management reform, very, very successful, which has happened in this country. And there are very few such examples all across. If you remember, secondly, direct benefit transfer, one of the best PFM reforms, magical PFM reforms, where the money leaves the RBI bank account and reaches directly to your account or my account. No intermediaries. You must have heard that out of 100 rupees, 15 rupees only reaches the beneficiary. Now 100 rupees reaches the beneficiary directly from bank account. And this DBT has been operationalized through PFMS, where in the first step, we validate the bank accounts of the beneficiaries, which are eligible beneficiary through Aadhaar number and all in this IT system. Then only the successfully validated beneficiaries payment file are processed and through for direct credit into bank account. You will be surprised to know that during pandemic, even the country like United States could not give cash benefits to its citizen in a centralized manner. They had to issue checks and all, and which was not being feasible in view of pandemic. But Government of India, throughout the pandemic, no payment stopped. All the payments, whether these are payments of salary or vendors or payments to agencies or DBT or payment to Kisans or 500 rupees to the women, these all were done through PFMS, through the direct benefit transfer. So direct benefit transfer, cash management through just-in-time release, these are two very, very big success stories of public financial management reforms of this country. And it is the best in the world.
So it's great to know, and this particularly just-in-time cash management is really something very to be proud of that has been done by us. And so can you let me know if any other country, whether it is if we view in the manner of development, that those countries which are behind India in their development journey, whether they have also started or they are getting some information or they are getting these type of expertise from our government?
They are, because these concepts are international. The concept of just-in-time or direct benefit transfer, these are international concepts. So many countries have been trying, but through different modes. Some countries have trying to through their banks. They are using their bank's IT system to do it. Some countries are developing their own IT systems like IFMIS and JIFMIS, like Brazil. Brazil has developed a very good IT system for this direct benefit transfer. and it has been quite successful on this. I mean, United States and United Kingdom have been leveraging their banks to undertake all these activities. So there are different stages, but these are international concepts, and many countries have been trying. Now, the smaller countries like Turkey, Chile, all these countries have made big strides in past 3-4 years in these directions.
Okay, sir, when we
I would just like to give one additional information. I just gave you the concept of grants in aid for capital assets. Now, one implication which we of this concept is that whenever we calculate revenue deficit, so revenue deficit is revenue expenditure minus revenue receipts. So when I take revenue receipts, revenue expenditure, I also include the grants in aid for capital creation. Or in other way, whatever revenue deficit I create, revenue expenditure minus revenue receipt, I exclude the grants in aid for capital creation from this. So my revenue deficit gets lowered on account of this. And it's a more realistic revenue deficit.
Sir, another thing is that one of the things that we observe is that US is following rules-based accounting instead of principle-based accounting, and IPSAS also prescribe principle-based accounting standards. In your
In fact,
which basis is good?
if in India is also hardcore rule-based accounting, it follows hardcore rule-based accounting. It is just recently that GAZAP was established in the year 2006. Yes, 2006 it was established. It is represented by all accounting organizations like defense accounts, civil accounts, railway accounts, post and telecom accounts, and very importantly, your organization like ICAI. Still, since 2006, now it's around 18 years, GAZAP could only notify 3 standards, which is like quite unsatisfactory from the point of view of expectations. But the reason is, it's not that GAZAP has not made efforts. GAZAP has been making efforts, but the problem is, and the issue is that India, what you said, follows hardcore rule-based accounting system. There are elaborate rules, regulations, GOI instructions, government accounting rule, receipt and payment rules, suspense manuals. All these guide the capturing of transactions. And accordingly, the financial statements are prepared. But now, in the form of notification of standards, which we call IGAS, Indian Government Accounting Standard, we are being asked or made to present our financial statements in a standard form with standardized disclosures and reporting requirement, which can be compared internationally and which are aligned to the framework of International Public Sector Accounting Standard, IPSAS. So we have been trying to shift to principle. So same is the situation with all countries like US, you said. So every country in the beginning, in the first instance, has a very robust rule-based accounting system. Slowly and slowly, in view of the requirement of standardization, international comparability, disclosures, international disclosures, there are initiatives like plugging the data gap initiative between G20 countries, DGI. So when we had this G20 conference, it was one of the themes that reducing the data gap initiatives or having the data gap initiative. So all these now are emerging requirements, and these emerging requirements are nudging the country to go for standardization and principle-based financial statements.
So when in accounting, a major part is internal controls, and it plays a major part because ultimately how much is the internal control mechanism strong, that will lead to proper accounting, and also it will give the true picture of what is actually happening. So what are the most effective internal control mechanisms that can be implemented in government accounting systems?
Reconciliation. There are reconciliations at different levels. And it is really interesting to know the depth of reconciliation and the coverage of reconciliation. To begin with, whenever there are systems of departmental officers preferring the bill and accounting officers, payment and accounting officers passing the bill and making the payments. So there are PAO, payment officers, and DDO, drawing officer, departmental officers, PO DDO reconciliation, well-established mechanism of PO DDO reconciliation, which establishes that the bills were paid which were preferred originally by the departments, and there has not been any tinkering in this. That is number one. Now, government has a payment system through banks. There is a special banking arrangement. So each ministry has one bank accredited to it. And whenever I issue a payment advice, that bank pays from their own pocket and then takes reimbursement from RBI. So there are systems of banks reporting to me daily how many payment advice did they receive and how much payments they made against this payment advice. And they report to me through a statement called scrolls, bank scrolls. So I get a scroll, so I tally. This is internal control that, okay, no unauthorized payment was made by the bank on the basis of an unauthorized payment advice. Then banks take reimbursement from RBI. CS Nagpur RBI reimburse the bank the amount they have spent plus commission charges. Now, every month, the CS Nagpur sends payment and accounting unit wise a statement called put through a statement, PTS, which indicate that these are the payments for which your bank has taken reimbursement from me. You validate whether these payments were advised or payment advice were issued by you or not. So there has to be a tripartite. There is a bilateral reconciliation between DDO-PO as a robust internal control. There is a tripartite reconciliation between payment accounting unit, banks, and Reserve Bank of India on the one hand. And this is not only for payment. The tripartite reconciliation is also well established for the receipts. So banks receive tax, you pay taxes through banks, bank take from your bank account, and it has to remit to the Reserve Bank of India. So again, through this system, challan-based reconciliation, we also established that all the money received by the banks on behalf of the government as part of tax or non-tax were remitted in my central bank account through these statements. So there are very robust internal controls of reconciliation at different levels to cover all stakeholders to establish a very robust and effective internal control system in the accounting.
So we have some questions from the participants also. One of the questions is, how is government accounting different from private sector accounting?
It's a cash-based accounting system. We capture only those transactions where cash is involved, where we issue check or we receive money. No other transaction is recorded in the books of accounts. Whether a claim is received, no, we don't make any entry. If we issue a purchase order, we don't make any entry. So there are no payables entry, no receivables entry. So only cash-based accounting system where the cash movements are recorded, cash paid, cash received. This is the basic difference.
And so one is accounting reform or implementation of accrual accounting is wrongly taken as privatization. How this thing should be addressed?
Wrongly means?
So there are perceptions among people that when you are doing accounting reforms or implementing accrual accounting, it can be wrongly taken as privatization. So,
No. See, in government, there has been endeavors of shifting to accrual accounting in the past. And very importantly, Finance Commissions also recommended, 12th Finance Commission recommended, and 13th also endorsed. The point is, with the passage of time, it was realized that, first of all, the kind of efforts accrual accounting will require is huge, and it does not really help government in presenting its financial positions realistically, because see, government's transactions, government's public expenditure is very different from what it is in the private sector, which are profit oriented. There is a principle of matching principle. You match your revenue with expenditure. You track the rate of return or return on your investments. In government, huge amount of money are spent by the government, which is just like one way. There is no return to the government. There is no financial return. There may be return in the form of increase in infrastructure index, increase in child mortality, increase in maternal, reduction in child mortality rate, etc., increase in literacy rate. But there is no financial return. You cannot quantify this. Number one. Secondly, government can create money in the sense that government does not match revenue and expenditure. It can afford to have additional borrowing if its expenditure requirements are exigent in the exigency. So we have planned, we have a FRBM Act legal framework to discipline our borrowing part. But if we have some exigency, we need some extra expenditure. For example, cyclone or natural calamity has struck. We can make additional expenditure without any matching concern. So all these facts entail that we don't need to present our financial statements to really capture all this profit, loss, matching principle, matching between expenditure and receipt. We don't need it. But what we need is realistic capturing of our assets and liabilities, for which within cash-based accounting system, we have been making efforts. So within cash-based accounting system, we can have the capturing of receivables and payables. We can have the capturing of assets and tracking of those assets. We have issued the guidelines for capturing the assets, tracking the assets, monitoring the assets across financial year so that it can be capitalized. So all these efforts can be made within the cash-based accounting system. So we don't say that accrual accounting system, if we implement, it's tantamount to being in a private. No, it is not required per se, or to say in other words, we can fulfill the requirements of those accrual-based accounting system by adding a few things in the cash-based accounting system itself. Just give me 1 minute. I need to take a call. So that is the thing.
So one of the questions is whether there is any clear guideline in government accounting regarding capitalization of revenue expenditure in case the expenditure helps to extend the service life of the assets. And what should be the yardstick for capitalization of such expenditure? Because it often is observed that the Office of Accountant General raise objection when expenditure of major renovation work of roads, buildings are capitalized and asked to book it as a revenue expenditure. Then what should be the ideal guideline in this regard?
See, in government, the guideline is very simple. And it emanates from Constitution. Any expenditure which results in creation of assets which has life more than a year shall be capitalized. Other expenditures are revenue expenditure. And there are clear-cut accounting heads to depict this capitalization or otherwise of assets. So we have accounting heads like machinery and equipment, major works which are capital in nature. On the other hand, supplies and materials, minor works which are revenue in nature. Very simple. So these are the clear-cut guidelines. Government accounting adopts a very simpler practice to be followed for all these attributes.
So the another one is in many case grant for creation of capital asset under detail head 35 is provided to institute or corporation. As the land belongs to those non-government institution, capital asset is booked in their books, whereas the maintenance is also done by the state government. In such cases, capital expenditure is not booked in the state governments. Then, what is your view about this particular practice?
Maybe, if the asset is booked in the books of accounts of corporations, I am pretty sure that the maintenance will also be done by them. But states may give them grants in aid, or states may give them some loan, or states may invest money.
So you are muted again. So you are muted. Yes. So you may repeat the end part of your this answer because you were muted in that.
States may not, shall not directly spend money on maintenance of these assets. States may give these corporations some grant in aid, or may give some loan, or may invest in those corporations to enable all these maintenance and other activities, but they will not directly spend on maintenance.
So one is kindly clarify about cess collected and disbursed to the concerned organization by central government, how it is accounted at level of revenue section of the government.
See, cess is a tax levied for meeting specific expenditure items. So if it's a clean energy cess, the proceeds will be used for various environmental efforts. If it's an infrastructure cess, it will be used for developing infrastructure in the country. Now, cess is a part of tax accounting only. It is accounted as part of that tax, whether it is part of excise or part of income tax. Like education cess is part of income tax. Contingent this CCD are like infrastructure cess is a part of excise or other cess. Calamity contingency duty is a part of excise. I'm not remembering that. Now, the only requirement for cess accounting is that, just give me 1 minute. So the only requirement of cess accounting is that the whole proceeds has to be transferred in a separate public account fund so that we can earmark the receipt as well as the expenditure that it was spent for the purpose it was levied. And we have some specific accounting arrangement. When I take class of the CPF course, it is one of the topics of my session, the concept of non-lapsable pool. It is called reserve funds of the cess proceeds. So there is a specific accounting arrangement to show in the books of account that the funds were earmarked for a particular purpose, and whatever I was spending out of it, it was on the purpose for which it was levied. So I need to conclude in 5 minutes.
Okay. So one of the questions is actually, I think this is relevant because it was during the course of a deliberation, we are getting this question now. is there any mechanism to ensure that assets is actually created? I think when we were discussing about this internal controls, I guess one of the participants had questioned this particular part.
So what is the question?
Is there any mechanism to ensure that assets is actually created?
When you buy a machinery, equipment, land, building, asset is created. When you give a loan to any entity, financial asset is created. When you invest in a public sector unit in the government, you create an asset. You get the share, whether it is preferential share or bonus share or whatever share, these are your assets. So we do create assets in the form of all these activities, accounting activities.
So one is, which figure central government will consider on the actual spending, whether entry in PFMS generated or payment released by the bank? And
Whatever is payment released by the bank is as per the payment advice sent by PFMS. So obviously the actual payment and the actual payment released, the payment advice are the same. The voucher which is generated is for the same amount. So the voucher will be captured. It is the same.
So, and is it mandatory for statutory auditor to reconcile between PFMS and bank payments?
There is no need for reconciliation. PFMS is just enabling the transactions. It's an IT platform. It is not changing. Rather than issuing a check, a payment advice is being generated by the PFMS and it is being digitally signed instead of ink sign. So there is no question of reconciling the PFMS figure and other figures. These are no separate figures. These are your accounting ledger figures. Please don't have this misconception that PFMS is generating some statements and accounting figures of its own. No.
So another is, kindly highlight about PFMS portal where all financial transaction recorded and how it will be purposeful for transparency and governance. You have already highlighted this part, but if
for the transparency and government, that it has audit trail, who released the payment advice through its digital signature is available in the system, who created the bill, who sanctioned the expenditure, all are identified through the e-audit trail. All the documents created in the system are digitally signed and are stored in the system for quite a long time. As per the retention policy, you can retrieve it at any point of time for any purpose of investigation or any further audit or other requirements. So it is adding to the transparency and accountability of the system.
So one question is about sustainability of accounting reform. It is that sustainability of accounting reform is the main challenge. Even some government department who initiate things could not sustain further. How these things could be taken care of?
See, this is a big challenge, sustainability of accounting reforms, because it does introduce some amount of dislocation in the flow. So you are presenting budget every year, but now there is a separate accounting classification system, separate type of a statement. So you need to prepare a concordance to have a smooth transition. So these are challenging, no doubt, but these are a very, very important requirement of public financial management reform so that we improve our processes. So the solution is we should do it in incremental manner, one step at one point of time, and rolling out this, then shifting to other. Rather than going whole hog, the approach to shift to accrual accounts did not succeed only due to this, because people started suggesting that we should completely shift to the different accounting system as such, which was not possible in a country of scale and size of India at all.
And now one of the things that we observe, we will wish to have your view is your opinion that what do you see as the future trends in government accounting and public financial management, and how can the government stay ahead in these trends to ensure effective and transparent financial management?
The trend would be complete end-to-end digitalized. All the processes will be digitalized with the concept of single source of truth. So the moment you make a transaction, the transaction will be captured, and this will be used through the digital systems to populate different ledgers for different purposes, whether it's a ledger of asset, whether it's a ledger of appropriation account, whether it is a ledger of finance account. It will do in a completely seamlessly manner. So this is the trend which has been in practice, and the roadmap is to have this end-to-end digitize of all PFM processes. So far as accounting reform is concerned, certainly shifting to these international accounting standards like GFSM and COFOG is also part of the roadmap and ahead.
So, and since you mentioned about that we will be ending your deliberation, then so how much further you are wishing to take forward, if I can know, so that I can plan the questions.
No, you want May?
No, actually, you just now you said that we will be having another 5 minutes for this seminar. Yeah, so I will be asking only just one question, and it will be I guess it is a difficult question. I am of the opinion that what role does political will play in successful implementation of these reforms, and how can it be fostered?
It's a very important point because of the amount of dislocation it involves, amount of efforts of all stakeholders which is required. It's a very important.
So I request request you to kindly give your ending concluding remarks about the whole part on the theme, and then we can have an end.
So thank you very much. It was good to have good to attend this webinar and give some insight into the government accounting framework with some international exposure and the international best practices. Accounting reform is a very important issue where all stakeholders have to contribute and then carry it forward. It's a bit challenging, but through incrementally we can achieve. And the final result, final objective is to present our financial position in actual realistic manner for the other stakeholders and for other international communities to have a good picture of the country's financial position. Thank you very much. It was my pleasure to be a part of this webinar.
Thank you, sir. It was a great session, and we had a really great insight on the topics. It was definitely something that each and every question have been answered by you. And it was also a great thing to know that what are the reforms that our country is going through, and we are excelling in public financial management. And the things in some things which you spoke about, that we are leaders in that, and we have started it, and we have done it in a great way, and we are doing great in that particular field. So thank you for that. And I also thank the participants who have attended this seminar. Now I hand over to Prerna.
Thank you, sir, for delivering such an engaging and informative presentation. Your enthusiasm and in-depth knowledge of the subject were evident throughout the session. I learned a lot and truly enjoyed listening to your insights. Thank you so much, sir.
Thank you, ma'am.
And thank you, Ankit, sir.
Thank you, ma'am. Thank you for the opportunity. It was a very nice session, and we learned a lot from sir. Thank you, sir.
Thank you. Thank you.